something very important you have to know about the once-beloved momentum names. Many of these companies are not necessarily responsible for their own weaknesses. Just like in 2000, we had a lot of weak-handed shareholders who bought these stocks simply because they were going higher. Now, if the stocks are going lower, a huge number of shareholders went out because they never really had a reason for owning these names in the first place. But how much longer will these stocks have to get punished that are making money? I'll get into that later in the show. But for now, let's consider a specific example. Take HomeAway. I think HomeAway is a terrific business, and they're the world's largest online marketplace for vacation rentals. And unlike so many of the high flyers, this company's actually quite profitable. In fact, not only is HomeAway profitable, but the company just reported a better than expected quarter last Thursday after the close. HomeAway earned 5 cents a share on a 2-cent beat. Its revenues came in higher than anticipated, rising 33% year over year. Paid listings were up by 28%. And management gave upside guidance for both the next quarter and the full year. Yet what happened the very next day, HomeAway got obliterated, falling nearly 10% in a single session. And that's not because there was something secretly wrong with the quarter. The quarter was darn good. Just that HomeAway is in a very out-of-favor sector, and the sellers don't care about the numbers right now. Of course, because this company has real earnings, there will come a moment where the stocks become too cheap, and you'll have to have an opportunity to buy it on the way down. But before that happens, you have to understand that what you be buying. So let's take a closer look with Brian Sharpless, the co-founder and CEO of HomeAway. Mr. Sharpless, welcome back to Mad Money.
Always a pleasure, Jim. Thanks for that wonderful intro.
Absolutely, Brian. You know, I just, because I know you and I know you as a businessman, you have to sense that there is just this moment right now where if you had put up even, I'm not kidding, if you had done even 20% better earnings, do you think it would have mattered at this very moment given the cohort you're in?
Well, I think we're seeing with us and a lot of other companies that, stock movements don't tend to be correlated to the fundamentals they're posting at the moment. It's an overall sector rotation, I suppose, and I think you're probably right.
Well, I mean, but it's going, I think that some of the sector rotation makes sense to me because there's a lot of companies that are losing money. But the companies that are profitable are the ones that I think the market will come back to when it calms down.
Sure. I mean, this isn't 1999. I lived through that, where most of these companies weren't profitable. I mean, you've got so many internet companies like HomeAway that are asset-light businesses. They make a lot of money. They have access to global markets because they're digital businesses, and for that reason, they're going to continue growing very quickly for a long time.
And I thought that one of the most salient features on your conference call was a secular tailwind that I didn't know about. 47% increase in vacation home purchases between 2011 and 2013. 89% are renting it out. This has become quite a business for the regular person, if those kinds of numbers are true.
Yeah, we were shocked to see that. This is from the National Association of Realtors. They tend to be a year behind, and so that 47% growth rate was from 2011 to 2013. But that's actually astounding because these markets had been shrinking for a number of years after 2008. But as you say, the biggest stat to us that we're amazed by was that when they survey people buying vacation homes, almost 90% say they're going to eventually rent them out. And that is a huge, huge population of potential properties for our sites.
Well, do you think it's possible it's because the HomeAway notion is now in people's heads? In other words, like if you have to go hire some manager to do it and you're back and forth with that person versus being able to list it, the net has removed the friction for people renting.
Yeah, it has, but you should also be aware that about 36% of our business comes from property managers. So we're a marketing venue. We're the biggest in the world. We do deal primarily with individual owners, but more and more of the professional managers come to us as well, and it really depends on somebody's situation. If you've got a property and you don't have the time to manage it, you may hire a manager to take care of some of the logistics, but they in turn will still put it on a marketplace like HomeAway to get bookings.
Right, I know I should clarify because Airbnb does far more of the just direct, and I think that that's one of the reasons why I don't suspect HomeAway will have legal issues that Airbnb has right now in terms of who's the manager and who's the actual buyer, so to speak.
Well, one of the primary differences is something called merchant of record, where when people buy travel on HomeAway, they're actually paying owners directly, whereas in a site like Airbnb, they're collecting the money. That's very similar, by the way, to what a lot of the OTAs do, except for Booking.com, which uses an agent model where they're not collecting the money, it's actually going direct to the hotel. And so that does create a different kind of liability if you're actually selling the product yourself versus being a third party that's really a marketing venue.
Oh, definitely. Now, Brian, I've been tinkering with your site. To me, it's good enough that I want to not use some of the other sites. If you were to incorporate restaurants, if you were to incorporate comments, then I wouldn't need on my cell phone. I could just have you instead of Yelp. I could have you instead of OpenTable. I mean, you clearly have to be thinking about that because the device is better than what you're using with it for right now.
Yeah, we did just make an acquisition in the first quarter of a great little company that has a mobile app that we're going to be integrating into our own app, that when you rent a house from us and go on vacation, it's not only going to tell you about everything you need to know about the house, like, for example, how to turn on the complex audio system, but it's also going to include local restaurant recommendations and things to do by the people who own these homes, who actually live in these markets and, frankly, know a lot about those things. So we're pretty excited to move into that space as well.
Okay, and talk about the glad to have you vacation rental purchase that you made, because I thought that was defining for you guys.
Yes, so that is that application. And I think why it is a bit defining for us is that we've spent most of our years as a young company really trying to just build our marketplace and expand globally and get as many listings as we possibly can. But now that we're the market leader, we're really starting to focus on the user experience and making the process for the consumer as easy as possible. And I think if you've ever rented a house, you know how they have those big binders that tell you about everything from how to turn the heat on, to turn on the television, to where you find the towels. Well, all of that's now packaged in this neat little mobile app that will be specific to every house that you rent on HomeAway. And I think it's going to dramatically enhance the ease of use of people renting houses versus going to a hotel, for example.
No, I totally agree. I thought this was just a terrific acquisition. You've done a great job, and one day companies that will be rewarded for making money, not just for having good sales. Thank you so much for coming on the show. Brian Sharpless, CEO of HomeAway.
Thank you, Jim.
All right, there's going to be a tiering, guys. It's not yet, okay? The first ones that are going to go down of the high flyers will be companies like Brian's that are actually making money, okay? Not everybody is losing money. Some companies, by the way, we're going to find out in a moment, are making huge amounts of money and are still being thrown away. Brian Sharpless, CEO, HomeAway, AWAY. Stay with Cramer.